Thank you, Sergio. You're too funny, brother. Thank you very much. Please don't do that again. Thank you, Sergio. Gregory Jones, smoking some mint kush. Hold on, let me turn that music down. It's about enough of that for now. Those were wise words right there. You're gonna be so goddamn fucking rich. What's up, Fahad, Marissa, Chad, Lou, Sub, Cody? It's good to see you guys. Road Dog. This is what like my anthem is right now. It's like, hey guys, it's gonna do what it's gonna do. The plunge protection team is gonna bail out for as long as they fucking can because of the over leveraging by hedge funds is the most significant systemic risk to financial markets and financial systems. As stated by my ex-girlfriend, just kidding, old fucking Yeller, Janet Yellen. Some people think it's an insult to old Yeller the dog that I call her that, and I could see how the dog should be insulted. Old Yeller was a good dog. Janet Yellen's a fucking criminal with a hall pass. I'm not fucking leaving. Pam, you're damn right. What's up, Brando? Sergio, thanks again, brother. You're too cool. Aaron, if you smoke that garlic jam, dude, that's awesome. That's awesome. Yeah, this stuff is definitely on the potent side. It passes the gas test. Thanks to my guy. So as of the second quarter of 2021, a measure of aggregate liabilities that are vulnerable to financial runs increased 3.6% over last year of 2021, which was only in a 2-quarter period, to $18.2 trillion. So there's $18.2 trillion available, or vulnerable, I meant to say. The level was equivalent to 80% of nominal gross domestic product of the United States of America. If you don't understand why the fuck I say things like this systemic collapse is inevitable, and I'm not a financial advisor, but it's pretty fucking obvious to the whole world that you can't have 80% of nominal GDP at vulnerable to risk of financial runs, when in addition, banks worldwide have over $426 trillion in total notional derivatives. Now notice I said $426 trillion. There are multiple commas and a lot of fucking zeros in that number. That's the amount of derivatives held by our banks, and it does not include shorts marked as long and rehypothecations and a lot of other things. When you've got money market funds and cash management vehicles vulnerable to financial runs, as well as bond mutual funds that continue to grow rapidly and remain exposed to risks due to their large holdings of liquid assets, it results that stablecoins can suffer from structural vulnerabilities, and their market cap, you could say as well, has grown about 5-fold over the past 12 months as of the end of the second quarter of 2021. As we've all seen, crypto has started to... there's been a few jabs blown in crypto's direction, right? So excuse me if I got off on a tangent there, but I think it's pretty clear when you look at this, and Janet fucking Yellen, the head of the United States Treasury, the head of the plunge protection team that saves the markets day after fucking day, because of we're at war, and they're using that as an excuse to prop up their shitty stock market, when previously they were using COVID spending to prop up their shitty stock market, along with a $9 trillion Fed balance sheet. Their next weapon is letting inflation run rampant. Inflation is currently running rampant, in my opinion, because of issues that are being caused by the Federal Reserve, the artificial printing of money, people being forced to stay at home or be fired from their jobs or quit if they didn't want to take a vaccine due to illegal vaccine mandates that were overturned twice by the Supreme Court and overturned and reinstated twice by the POTUS and Democratic Party. This is what I wanted to show you guys. If you're unaware, this was the action today on March 9th, 2022. This is all I want to talk about. Today alone, we saw an 8.65% run and an 8.65% suppression of the volatility index via the ESF fund, which is our taxpayer dollars used by the plunge protection team. The plunge protection team has no oversight. They answer to nobody. They don't have to tell anybody who, what, when, or why. They are spending tens of billions of dollars to prop up the stock market and the economy. Naturally, you could argue that that's a good thing, that they're keeping the economy afloat. But it's not, because they're using so much artificial money that they've printed. 40% of all money in existence was printed in the last 18 months. And that's causing bankers and the 1% to get richer, and the 99% and the middle class to become completely obliterated. Over a 1-year period, from the beginning of 2021, Americans had $4.07 trillion in their savings account. By the end of the third quarter, that number was down to 1.67 trillion. So Americans lost about 63 to 65% approximately of all of their savings. Not just mine, not just yours, not just your brothers and sisters and mothers and fathers and sons and daughters, your neighbors, your friends, acquaintances, people on the other side of the world that you don't know have all lost a lot of money. But here in the United States, specifically, we have lost 2/3 of our savings due to inflation, supply chain issues that are furthering these issues, these problems, and the artificial printing of money. So when the plunge protection team is, what they're doing here, in my opinion, is using dark pools to cover some of the billions and billions of dollars of failures to deliver that they have on the VIX by picking up assets in this. They're basically closing short positions. They could buy to close on their puts, for example, among many other things like ISDA contracts, futures contracts, and swaps. And in the same 1-minute candle, to prevent the implied volatility on your options from making you rich, they take out more naked shorts or buy or sell short positions here. They could sell naked shorts, they could buy puts, they could sell naked calls. This right here could be selling naked calls. It could be a number of things. But the only people in the world that can spend this much money in 1 minute and it not be shown on documentation as to who it is the plunge protection team. Unnamed buyer or unnamed seller. They can be an unnamed buyer or an unnamed seller, okay?
The BlackRock or Vanguard.
But the thing is, BlackRock or Vanguard can't be named as an unnamed seller for a purchase of that size. They can for smaller, not tens of billions of dollars. I don't know the exact amount right off the top of my head, but it's here. In March of 1988, Ronald Reagan created the executive order to create this advisory group. And its original purpose was to report specifically on Black Monday events of October 1987. And what it turned into, it issued a recommendation to Congress requesting changes in the market of derivatives and convened during the global credit crisis of 2018. They work very hard to spend our taxpayer dollars to keep the stock market afloat, to keep rich people rich and poor people poor, in layman's terms. It's not widely covered. It's not a big secret, but the majority of people don't know about it. Okay, they don't release the meetings of their minutes. They don't have their recommendations to anybody. Not to the President of the United States, not to Congress, not to the House, the Senate, nobody, not to anybody. Janet Yellen is the head of the plunge protection team, and both Gary Gensler and I can't remember who else right off the top of my head sit on the board of the plunge protection team right now, as well as other people. And for those of you that don't know, this is filmed live, so I'm just going off the knowledge off the top of my head. I will occasionally make mistakes or forget something like the, other people on the board of the PPT, which is pretty easy to find out. But I can tell you that Janet Yellen is the head of the plunge protection team, and she gets the final say, as well as does, Gary Gensler is her right-hand man. It's the devil and her demons. So, look, on February 5th, 2018, the Dow Jones experienced a drop that was twice as large as the biggest point decline in history. However, arbitrary and aggressive buying cut the decline in half in one day. Tuesday and Wednesday that week, stocks opened lower. Each time the aggressive buying buoyed the markets. That aggressive buying was being orchestrated by the plunge protection team. They've been doing this over and over and over again. It's purposely used to manipulate the stock market and do things like this. It's part of the reason why there's a $9 trillion balance sheet. This here was a way to cause a gamma ramp on the S&P 500 today. Plain and simple. This was a way for them to pump up the stock market in return, probably some naked shorts and synthetic shares. I'm sorry, there's no shares of the VIX, but naked shorts and naked calls and a lot of other things. Naked puts, I should say, as well. They're most likely covering naked puts and naked shorts. And they do it in a dark pool, so they can cover as many as possible. We know for a fact that Jerome Powell explicitly admitted to having over $1.25 trillion worth of puts on the VIX several years ago in 2019, I believe it was. So as of right now, I can almost assure you that it's probably double that, just as a rough estimate. This isn't just something that happened today, and it's not something that was a glitch. This is Webull. Okay, this is over here trading. It's 1208, and it's a massive 6.5% jump on the VIX. This was the Chinese stock market yesterday. The Shanghai was down 5% the day before yesterday, and another 2.6% on March 8th, 2022. The SCZE, Shanghai was down 2.6%, and the Shenzhen was down 3.37%. Market sentiments are fucking terrible. Look at what's losing. Industrial in China is losing. Chemical production, large state-owned banks, securities, liquor even, real estate, refining chemicals are down 4.5%. Medical supplies are down 5.8%. Almost as if that COVID issues, kind of getting a little bit better. Like the reduction in COVID cases, and it's almost bad for the stock market. I wonder why. I wonder why. Take a look at this fucking shit. This is a joke. Okay, this is the Shanghai index and the Shenzhen. Here's the Shanghai strength and weakness. It's complete shit. The VIX is in fear territory. their shares, you know, their A-class shares, the top 300 in China. This is a global catastrophe. And some people, some people like to say that we're early, but I really don't think that's the case. I think we're right on fucking time. Because in the stock market, you're either in the play or you're not. And there's no getting in after the fact.
Right.
Look at this from March 2012. The plunge protection team hedging on Greece, you know. The Federal Reserve was at that time was buying more bonds to keep interest rates low, you know, and more, they were doing quantitative easing and printing money at a ridiculous rate since 2008. And in 2019, on September 17th, when the stock market started to crash, they started printing even more money through quantitative easing and the federal implementation and jumping in to take the reins on the reverse repurchase program, the RRP, the overnight reverse repo, that is used to give banks liquidity overnight because they need to maintain cash on hand, and junk government bonds, anything from 3 months to 30-year, are complete shit, and everybody knows it. So the United States government absolutely needed to. Now, don't get me wrong, I'm not insulting anybody that was sick or died of COVID or the vaccine, but the United States government 110% needed the increase and the increase in spending and the printing that they were doing to be based off of something, and that thing was COVID. Whether it was intentional or accidental, I don't know. But we are all aware that reportedly, you know, Wuhan labs that were funded by Metabiota, that are partially owned by Hunter Biden, who it was been working closely. The Biden administration has been working closely with Fauci on the COVID pandemic. In addition, Fauci testified in front of Congress saying that they were not doing gain-of-function research, which in fact we have found out since then that Fauci in fact has done gain-of-function research, as well as I believe he is now in the witness protection program, if I recall an article that I read earlier today correctly. I think he should be. But the government will use everything that it can to, and the financial system, the markets and the bankers, the central bankers, and the Fed, the heads of the Federal Reserve here in the United States, will use everything that they can to work together with government to maintain our system, the status quo of our current financial systems, economy, stock market. And unfortunately, it doesn't matter whether it was real or fake. The fact remains that the United States needed and abused the issues with COVID and lied to the mainstream media and gave people, actually paid through the use of a FOIA request. You can go look it up on Glenn Beck's show. Through the use of a FOIA request, the United States government paid over $1 billion to mainstream media firms to only say positive things about COVID research. You can go look it up on Glenn Beck's show or on Blaze TV, on YouTube, and many other places. So, sadly, our entire economy, the GDP of our economy, our stock market is being artificially manipulated and suppressed and kept afloat. You know, the VIX, the negative things like unemployment in the VIX are being suppressed, and the positive things like the S&P 500 and pretty much everything else they can come out with, like their bullshit jobs reports, are being touted as positives. Even the Ukraine situation, unfortunately. It's a goddamn shame. We went from, now we're at forget COVID, save Ukraine. Like, what kind of fucking nonsense is this? It's absolute insanity. Hate Me asks, two things hit me as I smoke. This was to give their friends one day to sell before crash tomorrow, or is this plunge buys them a couple more months? When was the last plunge we saw? Actually, we're seeing them every day. Almost every single day, we're able to see the plunge protection team at work, and it really goes to show just how hard they're trying to make it seem like America's not being affected by these Russian sanctions, these sanctions against Russia, and some sanctions against China as well. But did you see gas prices? Because I got gas today. Have you seen your ComEd bill? Have you seen your fucking Nicor bill? I think I got mine right fucking here. You know, it's insane. We saw it on January 26th, for example. The S&P 500, the SPY, fell from 428 all the way down to 364. Let me show you this. Check that out. See the low circled right there? This was January 26th, 2022. At 9:04 in the morning, this was taken here. It dropped down to $364.68. And it closed at around $439.84. See, so it went down from 428 down to 364, way back up to about the same amount. Why? And this wasn't just caught by myself. Many people on Twitter posted this on their all trading platforms. And this was $20 to $50 billion worth of puts sold, probably naked shorted, naked puts sold by the Fed, the Federal Reserve, the plunge protection team, through the New York Fed or BlackRock. Most likely the plunge protection team through the New York Fed. Jerome Powell has made the New York Fed his little patsy bitch to do whatever the fuck he wants. And they're gladly do it. When they're all in bed together, making shitloads of money, they have no choice but to help each other make money and keep their shitty collateral afloat. Okay, I keep getting the question, what does this mean for stocks like AMC? What it means at the end of the day is when stock markets crash or collateral loses value for whatever reason, margin calls happen, margin defaults happen, liquidations occur, like Archegos Capital, family office, Melvin Capital, which lost like 65% of its fucking money last year in the January GameStop debacle, and many others. Margin calls and defaults.
And the commodity brokers for nickel.
Look at nickel. There's a reason that shit ran 200% in one day up to $100,000 a ton. That was just the beginnings of a tiny margin call short squeeze. Just the beginnings. It was just the tip. Just the tip of a massive fucking cock. That cock is a short squeeze. Recent short squeeze has sent nickel prices and mining stocks soaring. You saw it with oil. You saw it with nickel, palladium, many other things. Talon Metals, Canada Nickel, Polymet Mining, Glencore, Vale. 250% gain in 48 hours.
And yet silver doesn't move an inch.
Silver was down today about 1.5%, man. I bought some SLV options.
How the hell is that?
Exactly. Base metals are flying. Precious metals are suppressed so badly because Bank of America is leasing it from JP Morgan. If you take a look at CME Group on the CME Group, Chicago Mercantile Exchange, and you can see that they're leasing it, not even taking delivery of it, and then naked shorting it. Why? Because if silver runs even 20 to 30%, what happens, Cash?
Oh, insolvency.
Insolvency. bankruptcy, loss of jobs, people carrying at thousands and thousands of branches, carrying their fucking shit out of their banks and their skyscrapers, just like Lehman Brothers in 2008. When that happens, nickel and many other things, oil will squeeze first. And just like they did in 2008, they'll collapse, in my opinion. And then there'll be another squeeze. Things like AMC and GameStop and heavily shorted stocks. And then after that, there'll be another squeeze. There'll probably be precious metals. Why? Because they'll need to fill up the hole of collateral that is being plundered away right now via Russia and Chinese sanctions. Plain and fucking simple. Let's see. There's an executive order that expires on June 2nd, 2022. Interesting. Why did that not work? Excuse me one second. That makes sense because I didn't type the number 1 after my freaking name. All right. This China collateral had amendments. Whatever that tweet. There we go. Had amendments that happened in February. The actual sanctions take place and are effective June 3rd, through June 3rd, 2022. They were previously amended on June 3rd, 2021. This is the issuance of Chinese military, industrial complex, sanctions, and regulations. It's an amendment to owning stocks, basically, that are related in any way to financing communist Chinese military companies. What is this? The executive order states that any transaction entered into on or before midnight almost of November 11th, 2021 to divest in whole or in part from securities that any United States person held as of 9:30 a.m. Eastern Standard Time, January 11th, 2021 would no longer be valid. This is via a Trump executive order that he signed November 11th, 2021, I believe. And this executive order here was issued on January 13th. It looks like right here for national security and defense. They're amending, it's an amendment on top of amendment on top of amendment. So I know there's a lot of dates going around here of the dates they were issued, but the one you got to think about the most is the dates that these sanctions actually took effect. And that's what we're going to look at right now. I have it highlighted already over here. And here is the executive order 13959 from November 12th, 2020, addressing the threat from securities investment that finance communist Chinese military companies. Authorizing transactions involving securities of certain Chinese military companies. See this here, what this means? Except as provided, all transactions and activities are prohibited by Section 1A of Executive Order 13959 involving publicly traded securities or any securities that are a derivative of or designed to provide investment exposure to such securities. That means stocks, options, futures, contracts, swaps, you name it. Collateralized debt securities, mortgage-backed securities, collateralized debt swaps, I meant to say. Credit default swaps, collateralized debt obligations, super senior synthetic CDOs, all sorts of fucking things. And this was all effective through only 9:30 a.m. Eastern Standard Time, January 28th, 2021. Let's take a look. AMC stock, January 28th, 2021. What happened on that date? Let's see the historical prices. Here it is. And that's 2022. Sorry about that. That's not it. But we're going to click here and just adjust it. 01/26 through, let's go 02/26 of 2021. What happened? Watch. Here it is. January 26th. We've got open, high, low, and close. January 26th, we're at $5. It was $4.37 and $5.19. January 27th, we went from $11 to $20. It almost doubled. Let's go with open and close instead of high and low, right? And you know what? I think the high and low is nice. We went from a low of $11 on the 27th to $20.36 on January 27th. Why? Because covering started happening. Because hedge funds and market makers and banks knew that this executive order was going to take place. How do they know? They get email updates. I'm signed up for them. I get them every fucking day from Janet Yellen and the United States Treasury on all the sanctions. It's really easy. January 28th, we had a low of $6.51 to a high of $16.50. $11.60 to $16, $12.90 to $17.25. You know, how do we go from $4 to $16 here? That was no coincidence. No coincidence whatsoever. And I'll show you GameStop as well, because I love all the meme stocks. GameStop, $2.75, $2.85, $2.81. Oh, wait a minute, look at this. On January 25th, it went up like 33% to $3.85. That's pretty healthy. And then it went up from, to $5.19 even on the 26th. And then $20 on the 27th. Take a look at this. Right? Executive order that is authorized. These Chinese securities are authorized only through 9:30 on January 28th. January 27th, we run all the way up to $20, right? And $16 right here. Let's look at GameStop. Historical data. This is even more impressive because GameStop's the Mac Daddy. Let's take a look here. Currently sitting at $105, taking quite a beating. January 4th, it was trading at $19. 18, 19, 18, 19, 18. What happened on, let's see. It was at $20 on the 12th, $38 on the 13th, $43 on the 14th. It continued around $43 to $45. All the way through the 22nd, it almost doubled to $76. On the 25th, it went up to $159, $150 on the 26th. And on the 27th, the date where all that collateral became worthless at 9:30 a.m. Eastern time, the minute that the stock market opened, this bitch became $380 fucking dollars. $483 on January 28th. $413. $322.
You're telling me they're correlated.
I would say so. And I think if you don't understand it yet, you're going to understand it in a few minutes here. And if you still don't understand it, then you're a lost cause, in my opinion. But, okay, there's a little correlation here in margin call defaults and collateral no longer being part of the stock market. What happened? Why did they go position close only? Why did brokers go position close only? It gave them a little bit of time. Meanwhile, the executive order was delayed. Take a look at this. Again, through 9:30 a.m. on January 28th. And it was extended. Okay, Executive Order 13959 of November 12, 2020. Addressing, as amended, here's General Issue Number, Executive Order 13974 of January 3rd. So now they're making this other Executive Order, number 13974. Let me see if I can make this bigger for you to see. It's not working out, I apologize. But it says Executive Order 13974 of January 13th, involving publicly traded securities or any securities thereof. It authorized these transactions through May 27th, 2021. However, that's the date that it was made. As you can see at the bottom, it was not actually signed and taken into effect until 01.26 of 2021. That's January 26th, 2021. By then, it was already too late, and GameStop and AMC had fucking taken off, and shorts had begun to cover, and he created a margin call situation with a gamma ramp and gamma squeezes and FOMO buying when people started to jump in when they saw deep fucking value on the news in court. What happened on May 27th, 2021 to the stocks? What happened to your favorite stocks? Do you guys remember? Because I'm about to show you if you don't. Let's go. We'll go from April 1st through the end of, through June 1st for GameStop. Huh, look at this. Kind of the same as before. We were between 160 and 190, May 14th and 18th, 178, 174, 179, May 24th, we're at 188, May 25th, 217, May 26th, 248, May 27th, 264, May 28th, 268. So over $100 and $140 change, $120 change from the week prior. Again, because this collateral was now only good through 9:30 a.m. Eastern Daylight Time of May 27th, 2021. GameStop ran $120, $130. Let's go back to AMC. Now let's see what happened the days pulling up to May 27th again. Now, this is not, in my opinion, even theory at this point. This is a matter of fact. We'll go again from April 1st through June 1st, 2021. So you can see what happened on May 27th and the days leading up to it, just like we saw on the 3, 4, 5 days leading up to January 28th. The same thing happened. AMC and GameStop ran along with a bunch of other meme stocks. What do we have here? Oh, wrong date. Sorry, didn't click the button. May through... Weird. It's not populating. Very weird. Let me just refresh the page. Make things easier, see if that helps it out. Sorry for the technical difficulties. Yahoo sucks. But they've got historical data.
Well, this is why Evergrande is so important, and the Bank of America shorts.
This is true, because it's Chinese collateral and Russian collateral, whether it be sanctions and real estate, government junk bonds, T-bills, mortgage-backed securities, credit default swaps, fucking oil, you name it.
That's why Bank of America leased silver from JP Morgan.
Yep. Let's see what happened here. May 17th, in these days, we were at $10.63 on May 12th. I remember that. I remember buying $40 calls for AMC and watching them run up thousands of percent. That was fucking beautiful. Because on May 13th, we went to 1420, 1434, 1467. Still nothing. All the way up until the 24th, we were at 14 bucks. May 25th, we had 1660. May 26th, we had 1995. May 27th, we went to 29.76. May 28th, we got to $36. Are you fucking kidding me? June. Check out June now, because June was even more fun. Because it all led up to it and then created a ripple effect. That's why it happened after the 27th. We went up to $33. And then on June 2nd, $72. But wait a minute. June 30th went down to 68. What happened? Watch this. Watch this and pay attention closely. Okay? So May 27th, 2021, it was enacted here. It was amended to be good through May 27, 2021. Now, let me move over here, change to a different page. Here's another executive order, 14032 of June 3rd, 2021, addressing the order here. And on page 30,000 of it, you can see that the purchase or sale of publicly traded securities described in the subsection A of this section made solely to effect the divestment in whole or in part of such securities by a United States person is permitted prior to. That means it was extended through. Your ability to hold this garbage collateral from Chinese military communist companies is good through 12:01 a.m. Eastern Daylight Time on June 3rd, 2022. So they made it good through June of 2022. When did this take effect? Hang on, we'll go right there. Executive order of June 3rd, 2021. There it is, right at the top. See this? Executive order of June 3rd, 2021. A 30,145 page report that was only viewed 11,000 times. It's only been seen 11,000 times so far. But if you go to the Executive Office of the President, and you or online and you look for Executive Order 14032, you will see that it was implemented on June 3rd, 2021. And on the last page or so, page 30,146, they extended this collateral to be good through June 3rd, 2022. Why is this important? Because this happened on June 3rd, 2021. And June 2nd, we hit an all-time high of $72. We went from fucking $10, $9, $10, to $72 in a matter of a week and a half, 10 days. And then on June 3rd, it would reduce down to $68. Why? Because Biden saved the market makers, the hedge funds, and the financial system, because Janet Yellen, Jerome Powell, and all these other pricks knew that it would collapse the entire fucking stock market and financial systems if we know it, if they didn't extend this garbage collateral further out. On that fucking note, I wish you all peace and wealth. We're going to be so goddamn fucking rich!
So goddamn rich.
Fuck yeah. Peace out, everybody. Have yourself a great day.
Money printing's gonna be pinch.
What noise does the fucking money printer make, boys? You fucking know it, man. So don't ask me when market crash. Don't ask me when moon. We know as of right now, through June 3rd, 2022, this collateral is good. But before then, any single one of these fucking things could destroy the stock market. There's a million fucking catalysts right now. And guess what? It ain't getting any better. Not at fucking all.
House of Cards, man.
It's a goddamn house of cards. And I can't fucking wait to watch it fall. Don't say we weren't out there shouting it from the fucking rooftops, trying to fucking warn people on Reddit, Twitter, Facebook, LinkedIn, you name it. You name it, we've been there. Rumble, fucking up and down. We were trying to fucking show people what the hell's happening in the goddamn stock market. and what's happening in fucking AMC. And I want my fucking money, Ken Griffin. You fucking piece of shit crook.
We're gonna be so fucking rich.
You know it, brother. I'm not a financial advisor. I don't have a goddamn crystal ball. But I can see which way, I can feel and see which way the wind blows. Fuck you, Jerome Powell. Pay me my fucking money. Get the goddamn money printer out. Thanks, everybody, for your support. I appreciate you. Thank you very much. Hit Dice, thank you so much, brother. Much love to you. Thank you, Sergio. Thank you, Pam, to all my mods. Everybody, appreciate your support. Please like, please subscribe. I would appreciate it very much. And you'll probably learn something. Feel free to jump in the Discord if you want. We're going to close it up soon. Peace out. Thank you. Wow. It's fucking crazy, man. The majority of people don't know what the fuck's happening. 99.9% of people in the world have no fucking clue what the hell we're doing here and how we're gonna be so goddamn fucking rich. Oh, peace out, everybody. I love you guys. Goddamn fuck.